Welcome. Let's take a look now at a risk event for the week starting Monday, the 16th of May. And for this, we're off to Johannesburg to join Richard Snow from Daily FX. Rich, good to talk to you again. What do you got for us for this risk event coming up?
Thanks, Jeremy. I figured it would be appropriate to talk about the pound, cable to be exact, and that's in light of the two main pieces of data on hand next week, that being the unemployment data and, more crucially, the inflation data on Wednesday. Touching quickly on the unemployment data, rather, the labor market has proven to be fairly robust, even if we are to see a worse than expected number there. I do not believe it will have a significant bearing on the Bank of England's motivation to hike rates over the next few meetings. Unemployment still quite strong there at 3.8%. Now, speaking of rates, the May 5th Bank of England meeting revealed some resistance to the previous forward guidance. That was as two members of the committee now see risks to growth and inflation as more balanced. So that more or less implies that rates may not rise as high as initially thought, and this obviously bearish for the pound. However, most members still agree that some degree of tightening is still appropriate in the coming months. So the reluctance to hike certainly puts downward pressure on the pound over the coming months. So focusing on Wednesday's inflation data, we could very well see a counterintuitive market response if inflation surprises to the upside. And this is because high inflation worsens the current cost of living crisis, particularly at a time when there is some reluctance on the part of the Bank of England for sustained rate hikes. So just to sum up, a high inflation print, in my view, could indeed see more selling across cable. So looking at the chart, cable currently hovers between 1 spot 2250 and 1 spot 22 flat, with 1 spot 2 very much in sight. So between now and Wednesday, a lot can happen, and I wouldn't rule out a slight pullback towards 1 spot 2250 before a concerted move towards 1 spot 2, that flat area, with a slight the target slightly above that level. I'd say somewhere around 1 spot 205, with a fairly accommodative stop at 1 spot 24, just to cater for some volatility that may ensue around the risk event.
Okay, Rich, thanks so much indeed. Sir Richard Snow with his view for next week and a risk event around sterling with the jobs and inflation data.